Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at natural gas, starting with the hourly time frame. So if you've been watching these videos, we knew the bulls were back in control once we saw this huge green turnaround day. Then we knew consolidation was likely coming because we got overbought on shorter term time frames. And then after we got that consolidation, we were looking for an entry for the bulls at 350 support. Pretty much turned out perfect with the low being 3497. And we chose 350 because that has been a level in play before. You go back here to December 8th and the low that we bounced off of was 3503. So that psychological 350 level acted as support and it acted as resistance a little bit. We got back over it, so we know it's support again. And it was a perfect bounce off of that level and continuation to higher highs. So we filled the gap. We were looking to fill this gap back here, and that level, zoom in a bit. So we had that gap down, and that gap filled at 3718. So as soon as we got over 360, that was our target, and we missed filling that gap by 0.3 of a penny. We got to 3715, so technically that gap is still there. You can see the bulls are still in control, just consolidating straight across. But a really nice 20-cent move from 350 support. It was a nice bullish reversal hammer off of that level and confirmed with higher lows and higher highs. So the bulls on natural gas very clearly still in control. Let's look at the 4-hour chart for a different time frame here. We can see the normal healthy consolidation after the big run. Bulls turning it around very clearly. Consolidation, continuation, and we'll see if they can hit a new high next week. We're looking at 3777. The highest price we've seen, zooming out to the daily time frame. So after a month of straight green pretty much without a bearish reversal candlestick confirmed, we consolidated normal and healthy. We were patiently waiting for a bullish reversal candlestick. We got it in a huge way. And when you see a move like that, we were waiting for confirmation because we had a couple bullish reversal candlesticks with no confirmation. But after you're seeing a candlestick like that, you know the bulls are back in charge. You don't need to wait for confirmation when you see a green day taking out the previous 4 days of consolidation. We got that entry on a consolidation down to 350, continuation, and looking for higher highs if the bulls keep up this momentum. The weekly time frame, huge bullish engulfing candlestick following one red consolidation candlestick, and the bulls are back looking for higher highs. So if we do break 3777, where are we headed? And we just need to look back to previous history. And I'm looking at a high here, 372, so it would be above that level. 388 was the high of this week, this green week with that big upper wick of candlestick. So I would say that's the next level. And then you can see because of how quickly we dumped here, there is not a ton of resistance between 388 and we got $4 psychological, then up to this little gap of 4072. So the future does look bright for these bulls. If we can continue to keep setting higher highs, we don't have much resistance at all between 388 and really up to 407. We do have that psychological $4 resistance, but let's look at it on the monthly time frame. And the long-term trend trying to change here. You can see the big time bull volume coming in, and it's just been going down here. NGF 2017 for quite some time, since 2009, and the bulls are trying to reverse that trend. They really have a long way to go to do that. We would need to see a break of 4686 in my opinion, this little lower high here, but we're starting because we broke the high of this last little bounce attempt up at 360. So we did break one of the lower highs now. We have our higher low and higher high, and look at this bounce. It's really looking perfect for the bulls, where we have the initiation of the bounce, the consolidation, big bullish reversal hammer after that consolidation, now confirmed, and the bull volume is what is most convincing here. So we are looking for an attempt at the trend change. It just still has a long way to go, but in the short term, bulls in full control, looking great, and we're looking for more next week. So I appreciate you watching, and hope you have wonderful holidays with your family or yourself, anybody, animals, and we'll see you next week.